Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 14th of November. All right, the key theme here, the dollar slips after hitting one-year high against the yen. Well, it was a small little blip down on dollar yen. Once again, market a bit nervous, but the headings here will change very shortly to, you know what, the focus here for the markets is the US CPI numbers. Okay, and if we have a look across the instruments here, major currencies, well, dollar yen, obviously, for me, it's out of play. Right, there's too much going on with the dollar. Where we are at the moment, across most instruments, the dollar against most major currency pairs is in the middle of nowhere or in the middle of a range. It's ready to go up or down against everything, depending on the outcome of the CPI number, right? Could move up, could move down. The market is anticipating and waiting for the data to hit the market one way or the other, all right? Now, if we take a look at the equity markets, well, they are enjoying sort of like blue skies. If anything, weaker inflation numbers, especially after the US non-farm payrolls, well, you know what? They're buying equities and they feel as comfortable as. So to me, that they are susceptible to a big pullback if we get slightly stronger inflation numbers. That's the risk on the equity markets for my taking there. Now, the key data at the moment, we've got a big day of economic numbers, okay, for the Australian session, a couple of banks with their confidence numbers, UK employment numbers, average earnings, a big number. You got employment change, GDP, and the ZEW numbers out of Europe, right? But to me, that isn't the main game. The US inflation numbers are the main game. Unless there's significant variance in those other numbers, the markets will wait for those US core inflation numbers because it's so important to global equity markets, bonds, and the US dollar, and that rolls through the major currency pairs. All right, so it's very important you focus in on this. Just coming over to News Squawk, having a look here at the core numbers themselves. Well, you've actually got the core numbers, excluding food and energy, right? But the numbers the Fed have been looking at, right, are the CPI numbers, right? Month on month, year on year. To me, these are the major numbers, but you probably have to basket them together. Now, the CPI year on year, 3.3 expected. It was previously 3.7, and you can see the range there, 3.2 to 3.7. So why the range? A move outside that range will give us a significant move, right? Below 3.2, well, we're going to see the dollar fall to the downside. And above 3.7, well, that's the move to the top side. Okay, so we got a pretty big spread here. And what I say, a big range. Usually it's like 0.1 or 0.2, like the US core CPI numbers. Okay, so overall, you'd like to see weakness or strength across both of these numbers. But focus in on the inflation numbers themselves for my liking, with one eye on the core CPI numbers there as well. Okay, and 3.7 is your number, right? We really need a number above 3.7 to really get the dollar skyrocketing. And how do I know 3.7? Well, if I come back to the minutes, right, from the last meeting, the devil's in the detail. You can go through the minutes and go and find out what they're talking about, what they're referencing. Okay, and this is where they come back in and they're talking about the CPI, 3.7% year on year. So you know the number they're really looking for, right? As in their main priority number. All right. Okay. So now just coming back, if you want to get more details, and you should always be looking for more intricate details, check out the Fed website, right? You can go through Jerome Powell's press conference from the last meeting. It's very well presented. You'll see how well he presents himself. About 20 minutes in, he's talking about, one of the journos almost nailed him down to, have you got a hawkish bias, like a raising rates bias, or a neutral bias? And he just didn't confirm either way. He said they're not confident either way. Now, to me, though, weak numbers, right? Euro is close to a resistance line. It's got the most liquidity. That would be one of the pairs I would be focusing on. But at the same time, there is a chance for a clean out to the downside if we do get stronger CPI numbers. And we saw that with the US non-farm payrolls, right? A big weak numbers, big clean out to the top side. This is shaping up to be the same scenario. Sterling, well, it's right in the middle of a range, a bit harder. Aussie, it's coming off a balance or off a support level. Maybe a move through that on strong numbers. Easy move to the top side. Kiwi's right in the middle of a decent range there as well. Dollar yen, I'm not really sort of keeping a close eye on that. But dollar Swiss has got potential both sides of the market. And dollar index, stronger numbers, easy move to the top side. And plenty of potential on the downside there of the dollar index as well. All right. So, and the equity markets, as I was saying, I think the big risk here is a move to the downside. Stronger inflation numbers up towards that 3.7%. You're going to see the equity markets absolutely crap out. Okay. So make sure you are keeping a close eye on these numbers, because this is the answer, right? That's what we've been waiting for. It's been a long time since we've had a number where everything is so much in the balance, right? Potentially going up or down. So keep an eye on that range. A number outside the range means a bigger move. A bigger number on the downside, bigger move to the downside of the dollar, and a bigger move on the top side. Now, how would I trade this? Okay, just looking at my MT5 platform, there's a couple of ways, right? As I was saying, Euro looks very good. I'd be potentially, because it's sort of in the balance, I'd be looking at an OCO breakout, right? Which is not that often I would be doing that, right? And basically looking for a stop entry order both sides of the market. The top side is looking a lot better because we've got that resistance trend line to work with as well. Make sure, though, if you're using this strategy, you'd put your order in 15 points from the market, right? Just before the time of the release, about 5 seconds beforehand. Or if you want to reduce the risk, the easiest trade here is weak numbers. We've got that resistance trend line and it will blast through that, right? So you can either put that stop entry above the resistance trend line, probably a smart thing to do, or you can look to get in 15 points from the market. It really depends on where Euro is on the lead up to the release. Now, for those traders who are possibly going to be asleep, I'd be using Gorilla Trader, right? Now, once again, because we know the best side of the market with that resistance trend line, I'd have a buy stop top side, say with 10 lots, and a sell stop on the downside with 5 lots, right? That gives me the opportunity to make some cash if the numbers come out strong, right? And it will shoot to the downside. But the real big move, weaker numbers, 10 lots to the top side through that resistance line, that's got to be the best outcome for us, right? And don't forget, weaker numbers would signal definitely the end of the interest rate hiking cycle by the Fed, right? Especially if it's under 3.2%. So that's why I think putting more risk on the top side would be the best outcome. All right. Now, if you don't have these tools, jump on our website, sign up for the funding program. You'll get access to our trade execution tools, and then you can really set things in motion, right? These trade execution tools will really help you execute. And then once they execute, your job is basically to manage the opportunity. All right. And it's just a matter of hitting place. As I said, 5-10 seconds from the release of the data. That's as close as you want to be. Get the orders in play and then manage the outcomes once you do see the numbers. All right. So keep a close eye on the market, guys. This is all to play for. This is why you learn the markets, to attack them when these opportunities come out. Good luck. The CPI, it's the main game. Get ready to trade. Good luck, guys. All the best. Cheerio.